Hello and welcome, friends, fellow traders, and investors. My name is Lloyd Logan Boucher from On Point Stocks and Options Trading. You can all call me Logan, and this is your weekend market prep video. It's good to be back home. I mean, hey, what's wrong with hiking in the woods and getting eaten by mosquitoes every day for hours on end? I'm back from my elk hunt. The elk hunt was a successful hunt. Let's see if I have right here. Got my first archery elk. Pretty happy about that, as well as a pretty decent size 3x4 whitetail. And my buddy also got an elk with his bow as well. So a successful hunt. We had some elk burgers last night. We definitely harvest and eat every part of the animals. So very successful hunt. Thank you everybody who wished me good luck on the hunt. It came in handy. But now that we're back home, and it's time to get back into action. Pretty shocking moves in the market last week is I've kind of been detached from the market, not really paying attention, but noticing how the market did finally have a bit of a correction. And you could see that this was going to happen when we had 9 days in a row up on the SPX. It's very uncommon to see too many days in a row before you see a sharp correction. And the more days you see, usually the bigger the correction. Now, the interesting thing was, and I put a video out last week and I went into town there and got enough internet to give it a video to you all. I mentioned how the big question would be, will this 21 EMA serve as a resistance point against price? And apparently it did. As price came up, it hit that 21 EMA, it turned on, the algos turned on, and it drove price back down to the 50. Now we're kind of sitting between that pinch point. I call this a pinch. You can see right here that the two converging moving averages are forcing price into a narrower and narrower range. The breakout from this point will dictate which direction this market's going to go. And if we use the Russell as a leading indicator, we can see right here that the Russell has already broken down, closed below its 50 and traded below its 50. That serves as a site of weakness. Now, granted, again, the Russell is under a little bit more stress than the other indexes because of many of the small businesses being forced into bankruptcy with this COVID yet being extended even longer. And so, and we can talk about that a little bit later. And so we're seeing a lot of small caps taking a big hit, the brunt of the hit. They don't have enough, free capital overhead to really kind of float through this pandemic. So, but that's only one index. We have to be paying attention to all of them because they do correlate, and the rise of the SPX would obviously drag the Russell up along with it. The Dow still above, the Nasdaq still above, but both of them pinching between the moving averages, and the Dow still holding on top of its prior resistance, which now is support. But here's the question. Which direction will it go next week? Will it break lower and begin its new downtrend in a corrective move, or will it break back above that moving average and continue in its already well-established uptrend? I guess the question is, it's anybody's guess. Nobody really knows the answer to this, right? So all we can do is look at the facts. Now, what do we know that's happening with the economy? Obviously, COVID is still running rampant. Many more closures. School is starting back up, which may see a additional spike in COVID. But now there's also news coming out saying that people would come in for a broken leg and they'd be counted as a COVID patient, and people would come in with something else and be counted as a COVID patient. So we're kind of getting some you know, um, misinformation or news of what was misinformation in terms of the counting of the COVID cases and everything else now. So there's a little bit of, I don't know if it's conspiracy theories or it's facts that are out there, but there's a little bit of conflict in what the numbers actually are. But in the end, everybody's going to get blamed for everything. They're going to blame President Trump for mishandling of the COVID, and of course, hindsight's always 2020. There was always a better way, and nobody's going to know what the better way is in the heat of the moment. And then, of course, there is the election coming up. Now, prior to an election, there's always massive volatility in markets, and with this election, especially being one of the most controversial presidents of all time, being that he stood up against other countries and he implemented all these tariffs that both hurt and helped the United States. He did major tax cuts, which really helped businesses and many citizens. but at the same time, there was a lot of negative as well. So, it just seems rather coincidental that this whole COVID thing just happened to have come out on the election year prior. I can't imagine that the other countries would want ever more a new president in the United States. And so perhaps a new president would be Joe Biden. The challenge with Joe Biden coming in as president, and I'm not being political in any way, I honestly do not care who runs the United States, but I do care about the policies they run on because if a Democratic president comes in, he's more than likely going to raise taxes. He'll let the Trump tax cuts expire and probably raise corporate tax rates. Now, anytime if you're familiar with this, raising of corporate tax rates and letting tax cuts expire, that does not benefit a stock market at all. It doesn't benefit companies, it doesn't benefit an economy, but it does help pay down deficit. Now, there's a trade off because if they're collecting more tax dollars because they raise taxes from corporate and individuals, yep, they're going to collect more tax dollars. But because there's less money flowing in the economy, then the companies are making less money. They have to cut workers, they have to cut wages, they have to cut hours, and that slows an economy down. So it's really a trade-off. You're kind of damned if you do and damned if you don't. No matter what the politicians decide to do, it's probably not going to be better unless they just leave it the same, meaning tax cuts and low taxes in place. But who knows what's going to happen come the election. Just be prepared that this small corrective move could end up becoming something very serious, being that we really are only, weeks out from one of the biggest elections probably in the United States in many, many, many years. So just be very much aware of that and position yourself. I'm not going to advise you, of course, it's all for education purposes, but a trader should be positioned according to that. Long-time holdings may want to reconsider or hedge off risks as this election gets closer because volatility could become immense. And options will definitely increase in price as we get closer to the election, just simply on implied volatility expectations. So be aware, it's better to hedge early than late. All right, so looking at the indexes, once again, we're just pinched. Nothing to say. We've got a double top formation here in the Russell. Everything else is simply in an uptrend, but the uptrend is broken, but not reversed. Okay. So when I mean that, I mean is everything's making higher highs and higher lows and higher highs and higher lows. And as you can see, we've had this very similar thing happen before. Got pinched between the moving averages and it broke to the upside. And if that happens, the likelihood is it will continue for another few weeks to the upside. If we have a similar outcome to what happened over here. May not happen right away. There may be a one leg, two leg pullback before it breaks up, but the key is if it stays higher than this pivot low. So if this becomes the pivot low, if the next pullback, and I can draw this out for you, make it a little bit more clear, if the next pullback rallies up and then pulls back down and remains a higher low, then we're probably going to get something like that. Now, on the other hand, if the market ends up pushing back higher and then breaking down to a new low, that would establish then a downtrend. And now you're going to have a whole slew of new resistance areas that you'll need to get through to be able to continue this new uptrend or regain the uptrend. And being that close to an election, I would expect the buyers and the big institutional traders will just start liquidating heavily and they'll probably be capitulating the market to the downside. So be aware of that. It really is dependent and key that we don't break key levels of prior support for any serious type of break. A wick below is not a big deal. A small wick below, not a big deal. But if we start getting below that 50 moving average, or we start getting below the prior pivot low and holding below those lows, we're going to have some serious capitulation. So be aware of that, okay? All right, so that's for indexes. Let's take a quick peek at the index comparison chart. Now, on the index comparison chart, pretty amazing pullback here. The NASDAQ suffering the brunt of the move, having been up almost 32.5%, 32.6% at one point on the year, is now only up 19.37. That is that's a big pullback in a real short period of time. The S&P, which was up 9.8, is now only up 2.5%. And the Dow, which was actually positive 0.85%, is now down 4.1%. And of course, the Russell, which never got positive, the most it ever got to was a negative 4.4%, is now down 10%, over 10% on the year. So we're looking at pretty significant pullback and definitely a break of trend. You can even see it when looking at these analysis here. You can see that pretty much the trend is broken, but not it's broken but not reversed yet on every one of the indexes. So just be aware of that. Okay. All right, moving on, we're going to look at the sector ETFs. So, not surprising, you're going to see that the discretionaries and tech sectors have probably taken some of the bigger hits. Discretionaries is pulled back to its trend line and holding, and still kind of fluctuating with that 21 EMA. And the tech sector took the bigger of the hit, being that when Facebook and Tesla split, they had some pretty significant sell-offs. And we discussed this in a prior video that when those split, typically statistically speaking, there will be a sell-off. And as you know, that holds true statistically yet again. Both of those sold off. Now, maybe temporary, maybe not. We will see. Being this close to an election, it was a terrible idea to split this close to an election. Okay, so we're currently holding on the 50 right now on the XLK, and if that snaps and breaks and we start getting below, we'll be creating a downtrend, and we got to be aware of paying attention to that. This is correlating very closely to the NASDAQ, so keep an eye on the NASDAQ as well, as the tech sector is very heavily weighted in the NASDAQ. On the financial sector, it's holding flat above its prior resistance. It's holding on that support and pinching between the 21 and the 50 EMA. But what looks like could be end up being a double top may be a double top. It may actually be, or it may not. So we have to see what's going to happen next week. We need to know which one holds. Will the 50 algo turn on and break the 21, or will the 21 algo turn on and break the 50? In which case, we'll then have a definite idea of which direction the market's going to go. Consumer staples, which was holding strong for a very long period of time, finally did break its support point and is now fluctuating with that trend line. It's just slightly below the moving average, the 21 moving average, but still holding. You can see here with utilities and healthcare, which would normally be a flight to safety type of investment for investors. They would normally pile into these when they feel the market's going to correct, have not really caught a bid. They're just kind of flat. Now, if this is a broader market sell-off, which it could be, then they'll go down as well, just at a smaller percentile than say the tech stocks and maybe the banking stocks. But be aware that money should be coming into these if it's going to be a true correction in the market, that there should be some money pouring into utilities and healthcare. Healthcare, though, is pretty extended, so maybe more so into utilities and staples. Energy sector, wow. We've broken that key demand level right there, that key support level, and price pulled back up and retested and is now trading lower. And you can see it in all of the oil markets. So this means that the energy sector is, moving averages are diverging. The energy sector is going into a full-on correction. So we're going to have to look for shorting position opportunities in energy. Also, basic materials and utilities are actually two of my favorites. They're still holding strong. We have some industrial news coming out this week, which will affect both of these. I think it's on Wednesday or Thursday. So that's going to affect both of these markets. But basic materials is still going up, and looks like it's holding better than the other markets together. All right, let's take a quick peek here. All right, and so if you're liking these videos, folks, please remember to click the like button down at the bottom. I appreciate that very much. Also, subscribe and hit the bell icon if you haven't already. You're also welcome to visit the Twitter site or one of the links down below for the Twitter or the Facebook page or the website, which is still under construction. And also share it if you feel that this is useful information and you have a friend that may be interested in learning about the markets a little bit more. Feel free to share this information with them. It's greatly appreciated, all of your support. Thank you so much for that. I'm going to quickly cover some earnings reports here. Not earnings reports, economic reports. There's not a whole lot. It's pretty light this week. Tuesday, we have existing home sales, which is really high, pretty amazing. People are starting to walk out of the market, walk out of their homes at high prices, which is pretty smart. Right now, there's still people buying them, though. New home sales, once again, they're expecting a bit of a lower number here in new home sales. this for the month of August. And we have core durable good orders coming in on Friday. So Thursday, new home sales, core durable good orders on Friday. We have some, what else was there? Manufacturing PMI right here coming out on Wednesday. So not a huge amount of news this week, pretty light, mostly around homes and manufacturing and industrial. So not a whole lot of news. Now, I do have some picks, some chart favors. These are all favorite chart picks for the week. This is not trading or recommendations. Past performance does not equal future results. It's basically all for educational purposes. So just giving you a heads up on that. So let's take a look at these chart picks. I didn't do any last week because of the hunting trip. So we're just going to start afresh anew with these ones right here. First one I've got is Constellation Brands, STZ ticker symbol. And what you're going to notice is there is some serious overhead resistance. Okay. So I have not been able to find um, very good chart picks that might constitute a really good setup because there's just a lot of overhead resistance in pretty much everything because we're pulled back slightly. So I tried looking for ones that did look the best. Now, Constellation Brands has been in this great uptrend and it is kind of extended. We're currently consolidating. So if I put a couple lines on this right here, you probably see that this is a bit of a consolidation going on right now, kind of a pennant formation right there or a flag formation. Well, the problem with that sorry, I should say the good thing about that is that we're still holding above the moving averages and we're still holding above the trend, the overall trend. So this does have an edge towards breaking to the upside. I did put a buy box, and again, this is all for illustrative purposes, a buy box in place right here, which would signify an opportunity should price come in there and the candle turn white. But remember, there is overhead resistance on this one. We have resistance at 50, 195.80 area and another resistance point at 199. What is that? 199.97 area. So basically 199 area. Sorry, 199 area. So a couple resistance points overhead, but a bit of a pullback, a little bit more, and a nice strong candle could end up being an opportunity for an opportunity right there. Now let's take a look at Disney real quick. Disney does have some overhead resistance as well, but there is a bit of path in which we could move. It's been basically holding below this line right here, these prior pivots on the chart, which serve as resistance, but it's been piercing through again and again and again. And so far, it's just simply consolidating in the context of a very nice uptrend yet again. Disney's kind of the anomaly because they do have Disney parks, which generate a large portion of their income, but they also have a lot of TV products, which serves well in a COVID type of economy. So, they're half dozen of one and six of the other. But being that they are consolidating and they are still holding on that 21 moving average, even though it had an ugly close on Friday, and there is a trend line below, so I would say there's probably still an opportunity. Should price make it into this buy box and open up and show a nice buying opportunity? Of course, the risk on this one would be pretty small because it is really close to the trend line right now. Again, this is just for hypothetical scenarios and education purposes only. All right, FCX. So FCX is a copper, and basically they're almost like a proxy for copper because they mine a lot of copper out of here. They do have a couple of serious resistance points overhead, so we're up in that area where we're having a lot of challenges with resistance. Now remember, resistance is going to be an obstacle, not necessarily a wall. It can overcome that obstacle if the momentum is good. And the reason I'm really liking FCX, and I'm not saying that that means it's a definite buy, but the reason I'm really liking FCX is because as the market is in this serious correction, FCX is still trending up. It has not even broken seriously below its 8 moving average. And so it's showing a lot of strength. I expect it will hit this resistance point and give a bit of a pullback. That might give a buying opportunity, if not on Monday, maybe Tuesday or Wednesday. And so if it enters into that buy box again, gives you a good wick up, a good wick, a candle, white candle, that becomes an opportunity to get long. So on FCX, again, for educational purposes only, and I have to say that now because this is such a regulated industry. Um, if a pullback enters into here, I would be looking on entering as we're candles turning white and we're looking like we're showing some strength. So that becomes the opportunity on FCX. That's what a trader may do. All right, Let's continue on to the last one. Oops, let me get rid of this here quick. And the last one is a short. Now there are, whoops, where is it? There are lots, and I mean lots of shorting opportunities out there. And I just don't believe that this market's going to go down just yet. And the reason I say that is because the trend is up. And you can't fight the trend. Even though it's broken the trend, it is not reversed. Now, this has reversed, right? This is officially a broken uptrend, right? We have a beautiful uptrending market going up, down, up, down, up. And then we consolidated for a long period with a small poke up, and then we broke. Now look, we made a low in that consolidation range, then we broke below that consolidation range, okay? Now it tried to retest and it sold off, and the sell-off was a little bit early, and I didn't really care for that. But that's okay because this could end up being a two-leg pullback or two-leg retracement in the context of what we'll be setting up for our next impulse move to the downside. So I'm okay with that. There's very little support in this chart. This is pretty much the only significant support here at 59.95, basically $60. And I would love to be, or any trader would love to be a part of that move. So this is what I'm looking for. If we get a push up into these resistance points, which is a confluencing of moving averages and a support line now become resistance, that will be an entry opportunity with low risk. I wouldn't be selling it down here, not to say it wouldn't work, but I would probably rather see the two-leg retracement before the break to the downside. And so let me zoom in on that so you can get a bit better view on that. And there we go. So the two-leg retracement back up to a confluence of moving averages. If we hit that 21 and we hit that 50 at the same time as well as that resistance point, then that would serve as a really nice entry opportunity. All right, and that about sums it up for the week. So once again, folks, thank you very much for your support. I really do appreciate it, and thank you for giving me some time for my hunting trip. I've definitely got some more hunting coming up. I got a moose tag for November, and I'm probably going to try and get out and get another deer, a mule deer here before the season's over. I've got 4 freezers, and we pretty much ran completely out of meat. So we've got to, I got to get some animals in there this year. Sharing those elk with 7 other guys was, you don't get a whole lot of meat in the end, but everybody participates in the hunt, and that's how it works. We share the food. So thank you very much for your support again. And once again, if you like the video, give it a thumbs up. If you haven't yet, please click the support or this the subscribe button, and click the little bell icon so it sends you a notification to let you know when we have new videos released. Greatly appreciated. Thank you, everybody. Have yourselves a great week this week. Remember, you don't, remember, a trader does not need to be invested at all times. I'm completely flat in all of my positions right now, and I don't even know if I'm going to put anything on Monday. There's no race. It's not a race to get into the markets. You pick and choose your opportunities and you look for the best one, kind of like in hunting. Although we've seen a ton of elk while we were out there, you pick and choose the one that's going to give you the safest result, the highest probability kill shot, to say. In trading, you want the same thing. You don't want to just jump into any trade. Try and pick the ones that are going to work out the best to the plans and the rules that you have for your trading strategy. Thanks again, folks. Everybody, have yourselves a great week, and see you next Tuesday.